Hey everyone, this is Frank Ochoa, aka The Pivot Boss, and I had a quick educational tip here for you. Basically, this is something that you can take away from every single trading day in the market. And what happens here is we saw a bear trap underneath a key support level. So I wanted to talk about that here briefly in crude oil. And the key level that I was talking about for quite some time has been this 92.50. 9250 has been a major support level. It has given it up a couple of times here over the last couple of days, and then it reclaimed it yesterday with a huge rally. And the first move into that support level this morning, you saw a little bit of a move right below it here. When price got down below that zone, basically late sellers to the trend there were trapped and they were forced to cover, and that pushed price back to the ETH midpoint. Right around 92.79. The open price right in this zone right here, the open has been offered so far this morning. That's the RTH open, 92.86. And these were sellers looking to push price through that support level at 92.50. And when price got below there earlier, this was a point right in this area where sellers were unable to push price below 92.50 anymore, and they were not able to gain acceptance down below there. And when the market failed to make a lower high, right in this little zone right here, it made a lower high right here. It failed to make a lower low right in this zone. When that happened, price pushed back above 92.50. 92.51, that black line there, this is this line right there. That is IBL and the initial balance low. So that's, key support level at 92.50, IBL at 92.51, sellers unable to get acceptance below 92.50, price pops back above, and look what it does right here in this area. It makes 92.50 support from above, and then from there, everybody that got short got their stops triggered, and then you saw a short squeeze back up to the top of the range, 93.15, which is the initial balance high from earlier in the day. So right now the market is the bulls are attempting to establish acceptance above the initial balance high. Failure to do so would imply a move back to the open price at 92.86 with a test at the ETH midpoint, or the RTH midpoint, 92.79. So that's basically the pattern what you're looking for. And when you start to tie in the footprint now, let's bring in the footprint here. The footprint gives you a whole nother dimension when you're looking at it. Let's move over the chart a bit. Here's the 92.50 zone, right? So here's 92.50, key level right there. Let's just mark that as a key level so you can see it visually. Right there. That's now a key level. One thing you want to look for here is any imbalances that develop at or around or below the key level. And in this case, if this is the key level right here, right, this orange line, and price is dropping down, look at all of these sell imbalances that come in here. All of those sell imbalances, those are late sellers coming in, and those are sellers that when you see that much sell side imbalance, typically you would anticipate that price would continue to the downside, but it doesn't. Instead, price goes bid, which tells you that there are passive buyers there that are absorbing that sell side supply. So that demand there, caused by those passive buyers, pushes price higher. And then once price comes back on the first pullback, you see another sell imbalance right here, and this sell imbalance right in the middle. That one also goes bid. Price goes up. So again, you have a huge sell side imbalance that comes in. Price cannot go down and instead goes up. Again, that tells you that passive buyers came in to absorb that supply and successfully push price higher. Again, every major pullback should be read on the downside of the pullback, and that tells you that those sell side imbalances right there are being absorbed, and that usually leads to price pushing higher. So you can follow the footprint around at those key levels to help you find out a little more detail and depth into what's going on inside of the charts, because that basically tells you the story. And again, 92.50 as our key level again. Once price pushes back above 92.50, right in this zone, another one here, And then another one here. These are all sell imbalances that basically show you that buyers were defending, passive buyers were defending and absorbing that sell side supply on 92.50, and that led to a squeeze to the upside. All of the green that you see that come out here are now the buy stops of those sellers who were forced to cover their trades, and they became the fuel that pushed price higher. So that's what it looks like when you have a key level and you have a bear trap that forms beneath the key level, and they're forced to cover. Nice short squeeze into the initial balance high. I just wanted to give you some of those thoughts on the current CL chart. Let me know what you think.